Dear clients, welcome to PhillipCapital's weekly Market Watch. I'm Richard Leow, investment analyst from Phillip Securities Research. Today, I will share a view on 800 Super Holdings, which we have issued a trading buy rating on. 800 Super is an environmental services provider for the public and private sector. It has three complementary business segments of waste management and recycling, cleaning and conservancy, and horticultural services. 800 Super operates two material recovery facilities with a daily total capacity of more than 50 tons. It is one of four public waste collectors appointed by the NEA and also provides integrated public cleaning services. 800 Super was listed on the Catalyst board of the Singapore Exchange in July 2011. For the waste management and recycling business, 800 Super recently renewed its contract for waste collection in the Ang Mo Kio Toa Payoh sector for another 7 years and 9 months until 2021. For the cleaning and conservancy business, 800 Super has the contracts to provide integrated public cleaning services in the northwest and southwest regions of Singapore. Lastly, the horticultural services business encompasses grass cutting, tree pruning, landscape planning, and maintenance services. Statistics from the Ministry of Environment and Water Resources reveal three industry trends. First, total waste generated in Singapore is growing. It grew 5% annually over the last 10 years. Second, recycled waste overtook incinerated waste in 2004. Recycled waste grew 8% annually compared to 2% for incinerated waste. And lastly, the proportion of recycled waste has increased from 47 to 61% over the last 10 years. We see a valuation gap for 800 Super due to the following factors. It has effectively expanded its market share in the high barrier to entry business segment of integrated public cleaning. 800 Super has some contracts which transition between the second half of FY14 and the first half of FY15, with newer contracts with better margins replacing the older contracts. The partial contribution of new contracts to FY14 resulted in strong growth for the company. We expect further positive impact to earnings with full contribution in FY15. The investment merits for 800 Super are operating in a high barrier to entry industry with low intensity competition, distinct competitive advantage of already having two material recovery facilities, recession-proof business model, cash build-up raises the possibility of higher dividends being declared, and it is still undervalued by the market. To conclude, we have a trading buy rating on 800 Super with a target price of 67 cents. With that, I've come to the end of the presentation. Thank you for watching this week's Market Watch. I'm Richard Leow from Phillip Securities Research. Please subscribe to us on PhillipCapital YouTube channel and Facebook. Stay tuned for more Market Watch videos.